Opening an investment account on GoIPO is easier than before. Using your NCB online credentials, simply log on to goipo.jncb.com to provide the required information. Our digital biometric identity verification system will confirm your ID instantly, so your account will be opened in minutes. Plus, now you can open your investment account with up to 3 joint account holders. So build your wealth and experience life with NCB Capital Markets.
We all have a champion spirit.
Bye, Daddy.
A uniquely Jamaican spirit. We think the unthinkable and reach for the unreachable. As powerful as we are, there comes a time when everybody needs a strength. Something to take you over that last hurdle and across the finish line. Your moment is now. Unstoppable with NCB.
Good morning, ladies and gentlemen. Welcome to our investor briefing. And we are very excited today because we embarked on a turnaround. It would have been July the 17th, 2023. And at that point in time, you may not remember, but it was really the environment, the noise in the marketplace was loud, and it was not positively loud. So we had to embark on a turnaround which started on the 17th of July, 2023. And by the 23rd of July, 27th of July, 2023, we had made some significant management changes, very significant management changes. So that really kicked off the turnaround of the NCB Financial Group. One of the irritants of the day was that the group had not paid a dividend in over 3 years, approximately 3 years, except for a 50-cent dividend some earlier on in that time period. So on all, having made some management changes in that period, on the 17th of July, 2023, the present CEO, Mr. Robert Almeida, and myself, we became back to the group in a more active way. And on the 11th of August, 2023, we made an announcement that everybody cheered. And the announcement was that there will be dividend resuming before Christmas. On the 18th of December, 2023, the first dividend was paid to shareholders, 50 cents per share. You see, and at the same time, when we came back actively, we implemented what we call, the entire NCB now is very familiar with what is called EGC. We had to deal with the efficiency of the bank or the lack of efficiency. We had to deal with the governance or the lack of governance. And we had to deal with the customer service that was being meted out by our institution or the lack of customer service. And we are very forthright, as we always are. So much so that before coming in on the 17th of July 2023, there's a now very famous article. It's entitled I'm not happy. And it was written by the Jamaica Observer on the 13th or 14th of July 2023. And I'll just excerpt some of, from this article. Firstly, I'm not happy myself. I'm definitely not happy. And I'm not just speaking for myself, I'm speaking for all shareholders, including the pensioners. Certainly, we all depend on the income from dividends, Leachin told Caribbean Business Report. NCB Financial Group board is to meet later this month, and it is not clear if management will recommend a dividend to break the spell. This was from that article, as I said, on the 13th of July, 2023. It continued by saying, our cost to income ratio in 2022 currently was 84%, Leachin pointed out. When I bought the bank in 2002, the aspiration was to make sure that NCB Financial Group operates at world standards. So if you look at today and take a well-run bank anywhere in the world, its cost to income ratio is in the vicinity of 50 to 55%. Ours then was 84%. Not acceptable. That's 50, 84, 30% more inefficient. But it's not just 30% more, because when your cost to income ratio is 84%, it means your margins are 16%. 16% margin. When your cost to income ratio is 55%, it means your margin is 45%. Big difference between 16% margin and 45% margin. So we embarked on what we called, and where it's fully advertised right through the organization and to Jamaica, what we called EGC. We're going to take our efficiency down from 84% to the low 50s. Number, that's E. Secondly, G, we actually have changed out, made some significant changes to the board, and also explained to staff that governance isn't really a function of the boards of directors or subcommittees of the board only. Governance is a function of everybody's adherence to the corporate goals, to policies and procedures, and to do so in a manner that is world standard. So getting back to the top of the house, NCBFG, we made some significant governance changes. We brought in some internationally eminent board members, which would include Gary Brown, Mr. Director Brown. You may not know, but he ran CIBC's operations in the United States for 9 years. He also was a CEO of First Caribbean Bank for 3 years before his retirement. That's Mr. Gary Brown. We also brought to the board Mr. Howard Shearer. Now, Howard, the name Shearer would be familiar to all of us. But Howard is Prime Minister Shearer's son. He has been the CEO and currently still is of Hitachi Canada for the last 25 years. And you know, for a Jamaican to be the CEO of a Japanese company, he must be good. And Howard is very good. So he was a brilliant addition to the NCB Board of Directors, and again bring with to the board global, international, high standards. We also added our Director Arvinder Bharat, and Arvinder, she was prior to coming to us, and and she was an executive at RBC Canada, Barclays UK, and also a regulator, an executive in the Central Bank of Trinidad and Tobago. And currently she's a lead digital expert at the IMF. So what we did was to really constitute the board to a brilliant mix of international board members combined with the existing local board members who are excellent. So we now have what we consider the best board member roster in the Caribbean to guide the institution towards making sure that we achieve the turnaround we're embarked on, and also the governance throughout the organization that we expect and at the highest standard period. So why I'm excited is because today we're about to talk a little bit about our the last 3 months, the last year-to-date results. And the results, as you will see, really reflect the yeoman's job that the institution has done since July the 17th, 2023. With that, I would like to kick off the meeting by having the financial report read, explained by Mr. Malcolm Sadler. Malcolm?
Thank you, Chairman. Thank you, Chairman of the Board, Honorable Michael Lichin, Group CEO Robert Almeida, executives and other staff joining online, shareholders, all other special guests. Ladies and gentlemen, good morning, and thank you for joining our Q2 investors briefing. I'll be presenting the key highlights of our interim financial statements for the second quarter of the 2025 financial year. We have chosen for this release to include greater detail in the presentation of our interim financial statements, primarily with expanded notes and some items that would usually have notes in our year-end financial statements, but not in the interim. We'll be considering whether some of these additional notes should continue in our interim statements on an ongoing basis. For the 6 months ended March 31st, 2025, the group reported consolidated net profit of 22.2 billion, an 11.5 billion or 108% increase over the prior year. Net profit attributable to stockholders of the company was 13.3 billion, representing an improvement of 94% or 6.5 billion. During the quarter, the group's main insurance subsidiary, Guardian Holdings Limited, completed the sale of its Netherlands insurance brokerage business, which positively impacted consolidated net profit by 15.1 billion and consolidated net profit attributable to stockholders of the company by 9.4 billion. The sale of 100% of the equity interests in the Thoma Group was completed in January 2025. For the quarter, consolidated net profit and consolidated net profit attributable to stockholders of the company were adversely impacted in the amounts of 3.1 billion and 2.4 billion net of taxes, respectively, for provisions, expenses, and other adjustments related to prior years. I will comment further on this shortly. Operating income for the period totaled 77.3 billion, reflecting an increase of 25% or 15.3 billion compared to the prior year. Net revenues from banking and investment activities grew by 24% or 15.3 billion, primarily driven by the gain on sale of subsidiary. Insurance service results of 9.6 billion improved by 241 million or 3%. The insurance service results were however negatively impacted by a one-off net adjustment of 2 billion related to prior periods. Net insurance finance expense increased by 242 million or 2% due to higher finance expenses from reinsurance contracts as a result of fair value adjustments and changes in interest rate assumptions. The group also experienced a 71% or 2 billion increase in credit impairment losses, primarily due to increased impairment provisions and investments on receivables, as well as higher loan provisions, mainly in our consumer and SME segment. Operating expenses of 51.8 billion increased by 3.9 billion or 8%. This was mainly attributable to an overall increase of 4.4 billion in other operating expenses, and in particular, operational losses, which grew by 2.7 billion, including amounts applicable to prior years. Technology-related support and maintenance costs also increased by just under $1 billion. The overall performance for the 6 months resulted in an improvement in certain key metrics. Annualized return on assets increased to 1.90% from 0.96%, and annualized return on equity improved to 15.06%, up from 9.08%. The cost-to-income ratio decreased to 63.18% from 74% in the prior year, primarily a result of the gain on sale of subsidiary. 5 of our 7 segments reported higher operating profits compared to the prior year. Life, health, and pensions contributed 23.5 billion to the group's operating profit, improving by 11.3 billion over the prior year. This was mainly due to gain on sale of insurance brokerage subsidiary. This was partially offset, though, by lower net unrealized fair value gains and equities, as well as decreased insurance service results. This segment continues to be the highest contributor to the group's operating profit. The Treasury and correspondent banking segment achieved operating profit of 6.5 billion, 3% or 160 million above the prior year. This was mainly due to increased net interest income due to improved market conditions. General Insurance achieved operating profit of 4.8 billion, an increase of 118% or 2.6 billion over the prior year, mainly attributable to lower operating expenses, lower interest finance expenses, and higher insurance service results. The Wealth, Asset Management, and Investment Banking segment reported operating profit of 2.6 billion, an increase of 119% or 1.4 billion, primarily driven by unrealized and realized gains on investment instruments, together with improved fees. Corporate and Commercial Banking operating profit of 2.8 billion declined by 304 million or 10% due to lower net interest income, while impairment losses had a positive variance. The Payment Services segment recorded an operating profit of 2 billion, an increase of 40% or 559 million. This segment experienced increases across all major income lines. Both card issuing and card acquiring transaction volumes increased, which were partially offset by an increase in operating expenses due to increased card rewards. Consumer and SME Banking reported an operating profit of 371 million, a 44% or 288 million decrease compared to the prior year. Net fee and commission income and net interest income increased. However, there were higher credit impairment losses and higher operating expenses. In relation to our financial position, total assets as at March 2025 was 2.35 trillion, an increase of 4% or 84 billion compared to March 2024. The growth was mainly due to increased investment securities, as well as cash resources due to greater liquidity in our main Jamaican banking subsidiary. Investment securities, including pledged assets and reverse repurchase agreements, total 1.21 trillion, an increase of 6% or 74 billion. Loans and advances, net of impairment losses, total 623 $826.1 billion, a decline of 1% or $7.8 billion. Customer deposits recorded a 6% increase to $800.2 billion. There was a 7% increase in the number of deposit products opened compared to the prior year. Customer deposits continue to be our largest source of funding and demonstrates continued customer confidence. Equity attributable to stockholders of the company at the end of March 2025 totaled $182.1 billion, 12% or $19.9 billion over March 2024, primarily due to growth in retained earnings. All our regulated entities have met their regulatory capital requirements. In relation to dividends, the Board of Directors at its meeting held on May 8th, 2025, approved an interim dividend of 50 cents per ordinary stock unit. The dividend is payable on June 9th, 2025 to stockholders on record as at May 26, 2025. In closing, I extend sincere gratitude to our exceptional team, our valued customers, and shareholders for your unwavering support. I will now hand over to our Group CEO, Robert Almeida.
Great. Thank you to the team. Thank you, Malcolm. And thank you to the team for presenting a clear and comprehensive overview of the group's vision and performance. Chairman, directors, shareholders, colleagues, and members of the media, good morning, and thank you for making the time to join us. I'd like to start with some context. As our chairman mentioned, and we sometimes, talk, it's hard to talk about it sometimes, but as you may or may not have known, NCB Financial Group is in the midst of a turnaround. As restated in our financial statements on October 1st, 2022, our consolidated stockholders' equity was $135.6 billion. So treat that like a starting point, $135.6 billion. At September 30th, 2023, 1 year later, consolidated stockholders' equity was $170.7 billion. You can still treat that as a bit of a starting point or an intermediate point. At March 31st, 2025, consolidated stockholders' equity was $230.4 billion, an increase of 70% from October 1st, 2022, and 35% from September 30th, 2023. At March 31st, 2025, our consolidated stockholders' equity was 22% higher, and I stress higher, than other borrowed funds. And as a benchmark, at March 31st, 2025, JP Morgan Chase & Company's consolidated stockholders' equity was 14% lower than long-term debt. So to summarize, our consolidated shareholders' equity grew between October 1st, 2022 and March 31st, 2025 by 70%. And our stockholders' equity exceeded borrowed funds or debt by 22%. And that compares against JP Morgan Chase, which has debt, long-term debt in excess of shareholders, consolidated stockholders' equity. So clearly, adjusting for country risk, NCB Financial Group's consolidated financial strength is in line with global standards. However, when we look at efficiency, whilst we have seen improvement over the past year and a half, we still lag behind global standards. You may have heard, or you have heard me speak about being brilliant at the basics before. It's not new. It's also not something we came up with overnight. It's a strategy, one that's grounded in the disciplines that build strong, enduring businesses, and one that takes time because it requires each and every member of our team to be obsessed with productivity and with quality. We, the collective we, are only as good as our weakest links. Being brilliant at the basics will result in higher customer satisfaction. It'll also result in employees who are globally exportable, who are competitive anywhere in the world. It will result in efficiency ratios in line with global standards, and it'll result in financial returns which are attractive to global equity investors. This is our strategy. This is our journey. It has started with the tone from the top, the board of directors, and there is a growing understanding and acceptance of the personal accountability that is necessary for each and every one of us to be brilliant at the basics. We are a large, complex group, so it will take time. To borrow a simple analogy, you don't go to the gym on Monday and expect a transformation by Tuesday. Real change takes repetition. Many people have heard me say this, Karate Kid, wax on, wax off. It takes good habits, consistent effort. At first, the progress is invisible, but give it the projected time and it becomes undeniable. At NCB Financial Group, we are applying the same principle. The work we are doing might not always be flashy, but it is purposeful, and it is building something stronger every day. However, our scale means that success has a large amplified impact. So what does brilliant at the basics mean for us right now? This isn't just philosophy, it's how we operate. It means making every customer interaction smoother and more consistent across every channel, online, in person, or over the phone. It means investing in training, in digital tools, and in core systems that deliver improved service. It means keeping our cost base disciplined, ensuring every dollar works harder for our customers and for our shareholders. It means strengthening our risk management before problems arise. And it means embedding a culture of steady, thoughtful improvement at every level within the organization. Let me turn to our second quarter results, which Malcolm has already spoken about, and I'll just highlight certain things. In Q2, the group delivered net profit of approximately $17 billion, representing a 121% increase year over year. This marks our strongest quarterly result in recent years and reflects both strategic gains and more disciplined execution. Included in this result is a $15.1 billion gain from the sale of Toma by Guardian Holdings, which is part of our broader strategy to optimize the deployment of capital across the group. We had stressed that we were going to be committed to being better and more disciplined capital allocators, and proceeded with a number of transactions, a number of strategies in that regard. This gain was offset by $3.9 billion in provisions and write-offs related to prior periods. While it is never easy to take these charges, we take comfort in the fact that their identification is further evidence that our focus on controls and being brilliant at the basics is taking root. Excluding the one-off items, our core performance earnings continue to stabilize. We estimate that recurring profits are now in the $4 to $5 billion range per quarter, keeping us on track for improved return on equity and our cost efficiency targets. Overall, the core business is stronger, and our structural moves are paying off. Progress isn't always dramatic, but it is measurable. In Jamaica, we are rolling out world-class mobile POS solutions, modernizing payments for businesses. We are winning new pension mandates and expanding our asset management footprint regionally. Guardian continues to innovate and grow our insurance presence across the Caribbean. And importantly, we are taking meaningful steps to support the backbone of our economy, our small and medium-sized businesses. In April, NCBFG launched NCB SME Growth Fund, a $1 billion facility providing lower rate financing to local SMEs. Alongside this, we also became the first local bank to lower SME lending rates across the board. Not just talk, but action. These are the kinds of moves that reflect our commitment to customer-focused, high-impact growth. On the tech side, cloud migration and digital platform upgrades continue, improving our transaction speed, our resilience, and our service reliability. When customers don't notice the system, It means it's working as it should, and we are doing our job right. You would have noticed changes in some senior roles across the group. Let me be clear, these changes are planned transitions, not disruptions. The new directors and executives who have joined us, including Arvinder Bharat, Alison Filbert, Perrin Gale, and others, bring strong credentials and are already delivering results. They are contributing meaningfully with their fresh perspectives. Across the group, we maintain a healthy rhythm of leadership renewal. Typically, a standard 10 to 15% turnover per year is healthy for the organization. This is intentional. It keeps us fresh, it avoids stagnation, and it builds depth in our leadership pipeline. We understand the importance of regular dividends to our shareholders. While the Q1 distributions were deferred, I'm pleased to confirm that following the group's stronger financial performance this quarter, the board has declared an interim dividend of 50 cents per ordinary stock unit, payable on June 9th, 2025 to shareholders of record as at May 26th, 2025. Our approach remains prudent. We prioritize sustainable dividends supported by recurring profit, not one-off gains. We invest where growth is justified. We manage debt responsibly, and we return value to shareholders where it supports business and investor requirements. Building something great takes time. It requires discipline, and sometimes it means doing the right things long before they're visible or applauded. But make no mistake, the work is happening, and it is laying the foundation for a financial group that is not just bigger, but better, stronger, more agile, and future-ready, one that is attractive to global investors. To our shareholders, customers, and team members, thank you. Thank you for your continued trust. We remain committed to delivering real results the right way. And with that, let me pass it back over to David Garcia.
Thanks, Rob, and good morning, everyone. So we will start this Q&A session with a question from David Rose. Rob, the question is for you, and it relates to something that you just mentioned in your remarks regarding the deferral of the consideration of a dividend last quarter. And the question is this: NCBFG had a board meeting in February where the dividend consideration was pushed back to a later date in Q2 2025. That new meeting was never announced and no update was ever given to shareholders. What happened last quarter, and what is the explanation for not considering a dividend last quarter?
So, David, you can probably think about it this way. There are a lot of moving parts. Obviously, the world is very turbulent, and there are a lot of changes. There's a lot of geopolitical changes in the world. There are a lot of financial changes in the world starting late last year and definitely starting in January 2025. So main point there is we have to look at a number of considerations. Our North Star is always first and foremost the strength and resilience of the group, the strength and resilience of the operating subsidiaries within the group. We also are committed to paying all of our stakeholders. We're committed to paying our employees, committed to paying our suppliers, our landlords, the government for all the taxes we pay, as well as suppliers, depositors, creditors, and we also know that shareholders count on dividends and dividend consistency. So we take that very seriously. But when we took a look at everything, and I should also point out there is a bit of a seasonality in our business because we pay the asset tax all 100% upfront in the first quarter, and then we kind of earn through that through the rest of the year, and that's about $2.8 billion. So main point is we take all of that into consideration, our commitment to paying the consistency of dividends, but we also take into consideration everything else that's going on in our environment, including the things that we create, the initiatives that we produce, that we actually complete and don't complete at any period of time. And all of that goes into the decision to declare a dividend. So we didn't declare one in Q1. We called it a deferred dividend. and we continue to call it a deferred dividend as we've declared this dividend. So the calling it a deferred dividend is a sign of our commitment to consistency and to quarterly dividends and to consistency of dividends. But it is there are a lot of moving parts, and we're committed to practicing responsibility in the allocation of capital, including dividends.
Okay, thanks, Rob. And then David has another question on dividends, which almost is a converse of the previous, because in this one he asked, should NCBFG be paying a dividend with the current state of the market and lower core earnings from banking and from the banking and investment arm? Shouldn't NCBFG be prioritizing a stronger cash position at the NCBJ, that's the bank, and NCBFG level?
So
I think
so I'll just add a little
you
bit to my
sort of
last
half
comment.
answered that earlier, but go
half
ahead.
answered, but I'll add a little bit more. Just to address the last point there. So I said a number of considerations, a number of factors are taken into consideration. One of the things Malcolm mentioned in talking about our financial performance for the quarter and for the half year is that actually we are holding a tremendous amount of liquidity. So it was increased liquidity. So in our organization, in the context of everything else that's going on in the world. So in answer to the question, we've actually increased our liquidity buffers, and that of course impacts or dampens our ability to earn more net interest income. But nonetheless, it's the prudent thing to do to ensure that we have very, very strong resilience. So our capital levels are very good. You can do all the calculations on it. Also against regulatory capital ratios, they're very strong, and our liquidity positions are very strong. So, but those are all the considerations that all the factors we take into consideration in the determination to declare a dividend.
Okay, great. Thank you, Rob. I do have a third question here for you, also from David Rose. He did bless us with several questions for this briefing as usual. NCBFG announced yesterday that the divestment of Clarion had expired. This is the second announced divestment to not be consummated after the NCB Cayman transaction. What do these failed divestments, I'm just using the words he's used. What do these failed divestments mean for the group's planned debt reduction and capital reallocation strategy? And then he also asked, was NCBFG successful in its latest $10 billion debt refinancing round? Yeah, you can answer those, and then I'll ask another one that he has.
So I'll start with the last one. Start from the end. And so yes, successful in the latest refinancing round. So more than successful in the latest refinancing round. So that would be the short answer to that question. On the divestitures, you talked about two, but we've talked about saying we have a number of strategies to address our overall goal. So let's take a step back and say, what's the goal? The goal is to strengthen and increase resilience, strengthen the sustainability of the group. In my comments, I focused on the growth in stockholders' equity. So the tremendous growth in stockholders' equity tells you that let me take a little bit of a digression. There was a Q&A in the U.S. Senate yesterday, the day before, where one of the senators was asking Treasury Secretary Scott Bessent questions on the amount of debt, and Scott Bessent was trying to answer that one absolute number is not actually the most appropriate indicator. It's the ratio of debt to GDP, as everybody in Jamaica would be familiar with. We always talk about it as the debt to GDP. And so there's two components to that, a numerator and a denominator. And one goal is to reduce debt, and the other goal is to increase the denominator. So in our case, it's debt to equity and debt coverage of earnings, or debt to earnings ratio. So they're ratios So our debt to stockholder equity continues to come down substantially. And that was one of the reasons I wanted to highlight that in my comments, that the growth in the equity base of the company has made it tremendously stronger. At the same time, we proceed with a strategy that says, hey, how do we increase our resilience? It is by reducing debt. It is by, but we also look at it in the context of debt to equity, debt to our earnings. And then it's also in the context of lengthening out maturity profiles. It's in the context of diversifying our funding sources. So there are a number of strategies that are all intended to increase. Our goal is to increase the sustainability, increase the resilience of this important financial group to the Caribbean region. And so in that context, against that backdrop, there are a whole number of initiatives that we do. And while we could, and some of them will work, and we'll use the word, some of them succeed and some of them fail for a variety of reasons. And so the sale of NCB Cayman did not complete. So we do other things, and sale of Clarion did not complete. We will do other things. The sale of Toma by Guardian did complete, and the proceeds there are actually greater than what would have been the sum of the proceeds from the sale of NCB Cayman and Clarion combined. So we are, and there are other assets that we've also sold along the way that just that don't show up as being big. They're not large enough to make big announcements, but they do add up to a substantial amount of money. Our debt is down about 10% as we announced, I think, last quarter or the quarter before, and we will continue to delever prudently. But make no mistake about it, our gearing ratios are better, and our liquidity is higher, and our capital ratios are all stronger. So that's more important to us than just a single metric of reduced debt.
Okay. Yeah. Thanks, Rob. And then there was one small follow-up question that he had with respect to the debt refinancing. I guess a little bit more specific question was whether the NCBFG, the refinancing of debt was at the NCB global level, NCB as in NCB Global Holdings. Let me see now. Did NCBFG, refinance debt at the NCB Global Holdings level and owed to CIBC Caribbean Trinidad with a new corporate note? That's the question.
Okay, I'm gonna probably just a little bit more specific. Maybe I'll pass that over to Malcolm to to answer.
Sure.
So thanks. So both NCB Global Holdings and NCB Financial Group Limited, in terms of individual entities, would have done refinancing in March. So it's a mixture. And the second question, Dave, can you remind me?
Yeah, he wants to know whether it was refinanced with a new corporate note.
Yes, we would have issued a new note to replace the maturing note.
Replace the existing. Okay,
Yes.
Great. Thank you. Next question is for Bruce Bowen. So, and here's the question, Bruce, also from David Rose. Persons received emails from NCBJ, the bank, in February 2025 about transaction issues with the NCB Visa debit card going back as far as 2021. And he says he recalls the Uber saga happening in October 2024. Why wasn't this issue detected over nearly 4 years?
Yeah, well, one of the things, and as was indicated, we're going through a turnaround process of identifying areas that haven't had the sufficient attention and dealing with them. So when the issue was identified last year, referred to because the headline, what hit the press was about Uber, is we've really been going through the process of all of our payment channels and making sure that all of the technology is properly working, I guess, in the basic sense. So So we've been going through that, not just in the Visa debit, but in every area. And as we identify, I mean, at this point in time, I'm confident that we have identified all of the issues. And now it's just a process of continuing to strengthen our payments IT infrastructure. So the difference between the two specific instances you mentioned in I think it was September, October versus February, I can't remember specifically, but at this point in time, I'm confident that we've now identified those areas that certain transaction types weren't being processed properly. That also helps our efficiency because it avoids us having to put a lot of manual workarounds to deal with things that on the system side weren't working right. So going forward, I don't expect there to be any further issues on the payment side.
Yeah, and
All right.
David,
Thank you.
if I can add one comment there, Bruce
Yes,
used
Rob.
the word. So David's question was, why wasn't this detected like 3-4 years ago? And Bruce used a word in there that I think is important to highlight, which is he used the word turnaround, and it's been really important for us to you have to name something in order to so clearly, obviously, the answer to your question, David, is there was a problem in 2021, 2020 in that. Otherwise, we wouldn't be making those corrections. So clearly, there was a problem, and I think it's just once we act internally, I'll just share with you that once we actually started to use the word turnaround, it really helps us just say yeah and not focus on, hey, what was going on back then. Focus a whole lot more on what we have to do, what we have to do to improve things. So it's just a focus on improving efficiency, strengthening controls, improving quality, improving customer experience. It's a very, very much a forward focus on just getting better every single day.
Thanks, Bruce. Thanks, Rob. Have a question now for Daniel Cameron Duncan. And the question is this. Link is working on the virtual Visa card, and NCB is working with Trans-Jamaica Highway on a payment project at the tolls. NCBJ is working on another project with the RJR Gleaner Group. So clearly, Mr. Rose is following all of what you're doing, Daniel. And he's inviting you to speak on these set of developments and any new exciting projects. Also, how have your efforts been going in improving merchant take-up of digital wallet acceptance at point of sale devices?
All right, thank you very much for this question, David. Can count on
Daniel,
you.
I'm sure you plant questions with David. He always seems to give you these opportunities. Go ahead.
But let me take, but I'm willing to speak about them. So let me take them one at a time. So on the Trans-Jamaica Highway project, we're really excited about that. That was launched over a year ago. Groundbreaking work in terms of enabling card to transactions to be paid at the Trans-Jamaica Highway tolls. We have seen a significant increase in transactions, almost 3 times the card transactions since that launch. So great program and a multi-phase program. So the phase that we're working on now is around enhancing that solution, really looking at integrating their payments options with their internal systems, which allow for greater transaction efficiency, speed of transactions, which helps our motorists as well as our cardholders, and helps TJH with the reconciliation of their transactions much faster, much clearer, much more efficiently going forward. So that's the second phase of the project that we're working with TJH on. I'm very excited about that, and we continue to build on the capability alongside MasterCard in that partnership as well. So that's been going extremely well. On Link, also very excited to talk about Link. As you know, we've been building out our virtual card capability that is complete. Attached to that is the ability to do contactless transactions utilizing the Link platform on any point of sale machine, as well as doing e-commerce transactions. We're really excited about launching that. We are just awaiting the BOJ approval to move forward with it. It's really going to facilitate our Link users doing a lot more transactions with the balances that they have in their Link wallet. We've seen also, I just want to mention, a significant ramp up in the remittance transactions that are occurring within the app. So now when you get your remittance payments, you can do more than just pay bills, but you can also then utilize it to do transactions anywhere in Jamaica, and also e-commerce transactions utilizing the balances within your link account. So we're really looking forward to that launch of that capability in the next couple of months, BOJ coming forward. So that's going to be great. You're on top of it. There is a reward program, which we're excited about, which incorporates rewards not just for our merchants, but also for our consumers. So it's going to be one of the first sort of merchant rewards that really benefits merchants as well as it benefits consumers that we're working on developing now with our partners. So that's one of the things that, as you talked about, that we're working on coming up in the future. Very excited, David, and you've been one of the sort of, I don't want to say you, but you have recognized the value of contactless transactions and where that can take us as a country, and really have been trying, kind of pushing sort of the direction on that and digital transactions generally. As it relates to contactless, we've had very good feedback from our merchants. We've been doing a lot of work with the merchants to get them comfortable with contactless transactions. I'm happy to report that almost 50% of the transactions that we process are actually contactless. And that has been further sort of pushed with our launch of ePOS, which is doing really well, which is your ability to accept a transaction as a merchant from your mobile device, or any mobile device, really, Android mobile device, whether or not that's a tablet or a phone. So we've been seeing a significant ramp up. This year alone, we've processed over 70 billion contactless transactions. So I am really excited about the direction and the opportunities that creates, not just for in terms of the additional things that we're able to do and facilitating digital transactions across Jamaica, but that acceptance really creates so many opportunities for us to enhance our transaction capability, enhance security, which is the most important part of the contactless transaction, because every contactless transaction from a merchant perspective is protected. It is enhanced security for our consumers as well. So we don't want people swiping their cards anymore. We want you to just have that card in hand, have your phone, and just tap and go, move faster and move more securely on our point of sale machines and our ePOS machines. So very excited about all of that capability. Lots for us to continue to work on, scaling across Jamaica. So that's really our focus for the year ahead. But thanks for that question, David.
And thanks for that answer, Danielle. All right. We do have a couple of questions here from Al Edwards. So the first one, it's back to dividends. So I'm going to kick this one to Rob Almeida. And the question is, when do you foresee NCB paying out $1 per share in dividends, given your continued profit growth?
Yeah, pretty hard to put an exact date on that, Al. I think we continue to guide towards saying our direction of travel is consistently, so cost income ratio in the 50s, return on equity above 15%, that would and payout ratios in the 50% range. So as you can see from our numbers, we're getting the earnings growing into that range. We have to keep working on liquidity management strategies and other things that enable us to get that. And to the earlier comments on paying down some of our debt, terming out some of the maturity profile, and at the same time, and liquidity management strategies within all the businesses, and in order to get our payout ratio up closer to that 50% type number. So I can't give you an exact date, Al, but we're committed to getting there.
All right, thanks, Rob. And then another from Al, I think maybe we can let Bruce Bowen take this one. What accounted for the drop in the commercial and corporate segment performance for the period under review?
Sure. And thanks, Al, for the question. I mean, what's been happening over the last year is, and it was well known, not just in NCB, but across the sector, that with interest rates, short-term interest rates being high about a year ago, that the past year has started to see those rates coming down, started to see liquidity come back into the marketplace. NCB Jamaica was in a tighter liquidity position than we were comfortable with last year. So it's been a process of ensuring that we add more discipline to our pricing and that we're prioritizing liquidity. We have, over the last 3 months, gotten into a strong liquidity position, which we believe positions us well for what could be a choppy economic outlook, driven primarily with what's happening internationally. And with that increased liquidity position, that creates a certain amount of drag on profitability in the business, both the consumer, SME, and corporate business segments. There also has been, and market information will confirm this, there has been a slowdown in just growth of bank loan books, and we certainly have seen that. On the positive side, so all that to say that just the booking of new corporate loans had slowed down. On the other hand, over the last 3-4 months, we've seen significant growth in the pipelines of transactions being worked on. I'm anticipating seeing the loan pipeline and bookings increase over the next 3-6 months. So I expect that the profitability, the contribution margin of the corporate business will stabilize, and over the next 2-3 quarters, we should start seeing it increasing again. Not dissimilar to what we've seen on the consumer side. You spoke specifically about the corporate side, but the consumer and SME side, we see the same thing happening. So reflection of both our intent to build more liquidity and just general slowdown in loan originations across the market.
All right. Thanks, Bruce. Unfortunately, everyone, that's as much time as we have for questions today. And so any questions, as usual, that were not answered in the session, we will be able to reach out to the persons who asked those questions and have them answered after this session. That concludes our Q&A for this investor briefing, and I hand back over to our chairman.
Thank you very much, executives. As you can see, ladies and gentlemen, we have come a very, very far way from July 17th, 2023. And as Director Almeida reinforced, and Director Bowen reinforced, and myself, we are in a turnaround mode, and you have seen the evidence of a significant improvement in all the metrics that are relevant to the measurement of a sound financial institution. The one that is really a knockout, really, is the increase in equity of the company. That is just mind-boggling as to what has happened in such a short time frame, and the percentage change is just, again, we couldn't have expected that it would have been this high back in July of 2023. So the turnaround is taking root, as shown by the financial results, as shown by the operational issues that are being addressed, as shown by the customer service that is being delivered. We don't hear the noise in the marketplace as much as back then, way less. And, you know, when I think about what gave me an ulcer prior to the last few months, it was our back office IT infrastructure. That today I can happily say I don't have any more angst with respect to our IT. We're in great hands, and the resolution of issues are basically instantaneous. And it's just that IT department really is, again, emblematic of the turnaround that is right throughout the organization. But I must say that notwithstanding the growth of equity, the share price has not responded. The share price today is approximately 65% of book value. For a company that has shown the resilience, the responsibility that this has shown, and the performance, and also the consistency of dividends since December the 18th, 2023, when the first dividend was paid prior to a 3-year hiatus. We have now, today will be the 6th dividend paid to shareholders. So it's been consistent. So when you think about the consistency of dividend, you think about the growth in equity, the reduction of debt, the operational performance, and the share price is still today represents a phenomenal opportunity. So thank you very much, ladies and gentlemen, stakeholders of NCB. Thank you very much, board members. Thank you very much, executives. I am just humbled by the job that is being done by this organization. On behalf of all shareholders, a hearty thank you.